Thank you for standing by, and welcome to the Limeade Quarterly Investor Conference Call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Henry Albrecht, CEO. Please go ahead.
Thank you, operator, and thank you, everyone, for taking the time to join us on today's call. My name is Henry Albrecht. I am the CEO of Limeade, and I'm pleased to provide you all with an overview of our operating cash flow results for the quarter ended 31 March 2020. Doing today's communication from our headquarters in Bellevue, Washington. The only people here, as we're all working from home. Our Chief Financial Officer, Toby Davis, would normally join me on today's call. However, he is at home celebrating with his wife on the arrival of their newborn baby boy, who safely arrived into the world yesterday, Tuesday. So congratulations to the Davis family on behalf of everyone at Limeade. And I'm joined here today on the call with Toby's Finance Director, Adam Smith. The first full quarter as a publicly listed company on ASX was a busy one for Limeade. First, let me comment on the impact of COVID-19 and the response of the company to the pandemic before covering off our key operating and cash flow metrics for the past 3 months. The COVID-19 pandemic has resulted in a substantial change to the workplace environment, and particularly the employee experience. More than ever, employees need to feel valued, connected, informed, and supported by their employers. As investors will appreciate, Limeade has responded decisively to the COVID-19 pandemic with our employee experience software. As announced to ASX on 31 March 2020, Limeade is promoting over 160 activities through our software designed specifically to navigate employees through crisis, including many new COVID-19 specific activities and pieces of content. Additionally, during the quarter, the company has launched innovative tools such as the Limeade Care in Crisis Edition. This edition is a free subset of the Limeade platform capabilities focused on helping large companies who are not yet Limeade customers stay in touch with and show care for their employees, including remote and deskless frontline workforces. I'm pleased to report that the response from the market on these collective initiatives have been very positive to date. We've also extended our Limeade Wellbeing solution to serve over 200,000 Medicaid members in our home state of Washington. These members represent vulnerable communities that we're proud to support in times of physical and emotional stress, as there was a press release on this earlier in the week. Despite the unprecedented impact seen on most sectors globally, the company has not experienced a material increase in customer terminations or non-renewals, which we classify as churn as a result of COVID-19. However, Limeade has experienced some delays in finalizing contracts with some new customers in advanced contract discussions during the latter part of the quarter. However, it's still early in the selling season to determine the potential impact to future sales and customer upsells and expansions. The company is continually monitoring numerous short-term scenarios and has various plans in place to maintain financial stability and preserve capital if required to do so. We take pride in our financial discipline. Importantly, we reaffirm our FY20 pro forma and statutory guidance of $56.1 million pro forma and statutory guidance of $56.1 million in revenue, an EBITDA loss of $10.7 million, and a net loss after tax of $12.4 million. All of these figures are in US dollars. Turning now to the operational and financial highlights for the quarter. During the quarter, Limeade signed an additional 5 new contracts, including a single enterprise customer who's a leading player in the financial services sector. Limeade is a seasonal business with most deals typically closing in the second half of the calendar year, with services typically launching in the following year. And as a reminder, our fiscal year is aligned with the calendar year and ends December 31st, 2020. Late in the first quarter, we held our Limeade Engage customer conference and customer and prospect virtual conference We had to reimagine this conference into a 100% virtual meeting, obviously due to the COVID-19 pandemic. Registrations were up 258% for Limeade Engage versus prior corresponding period as a result of our change to a virtual conference. Our financial and strategic discipline resulted in a strong operating cash flow result with $1.9 million in positive operating cash flows for the 3 months ended 31 March 2020 versus $2.2 million in negative operating cash flows in Q4 2019. The company remains in a strong financial position with over $32 million in cash and no debt. During the quarter, the company recorded cash receipts from customers of $25.4 million. Net cash receipts from customers after adjusting for payments made in relation to the sale of third-party products and services was $18.6 million. This is a significant improvement over Q4 2019. Cash payments during the quarter were primarily directed towards staff costs, administration, and corporate costs, along with advertising and marketing and research and development. Staff costs increased 53.1% over Q4 2019, reflecting the payment of staff bonuses from the prior financial year. Relating to a timing effect, the company experienced a $0.8 million financing outflow for payment to the underwriters of the IPO, and additionally a $0.6 million financing outflow related to the final payment for the 2018 acquisition of Citron GmbH. We continue to track either in line with or slightly better than our expenditure plan from the funds raised in the IPO on ASX in December 2019, with $4.1 million of IPO proceeds invested during the first quarter, principally towards sales and marketing, and to a lesser extent R&D and general administrative expenditure. We continue to make additional hires with direct and relevant industry experience. A couple of examples: in early April, Limeade appointed Larry Colagiovanni as VP of Research and Development and Sam Testa as VP North American Sales. Larry is responsible for leading Limeade research and development teams to ship innovative employee experience software that employees and companies love, joining us from eBay. Eric Rivas, who previously held both the CTO and VP of R&D positions, will remain as CTO and direct much of his attention to inorganic growth opportunities. Sam was promoted to his important senior management position from his recent regional VP role at Limeade. We will continue to promote from within and look for leaders in the market with expertise to help us scale the Limeade platform and business. Sam continues to report to our Chief Growth Officer, Mitch Reisner. That now concludes the formal presentation. I would now like to hand over to the operator for the question and answer session. Thank you.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. Your first question comes from Tim Lawson with Macquarie. Please go ahead.
Hey guys, thanks for taking my questions and congratulations to Toby as well. Just a couple of things I wanted to try and clarify. Just on those contracts that you've called out for the first quarter, just thinking about, you mentioned that mostly deals close in the second half. So are these things that you think brought forward? Were they expected to be brought forward, or are they delayed from December quarter last year? Just trying to think about some colour behind that, the timing and the type of those contracts.
I would just say, thank you, Tim, for the question. I would just say that typically, this is an unusual year. It's probably a harder to forecast year than most. The statement was really just typically we sign more of our contracts later in the year versus earlier in the year. I'm not sure what to read into the fact that we signed 5 last year. We signed 30 new customers. So I don't think it came with any sort of prediction or color commentary in addition to that.
Okay. I think I think you said you thought that sort of churn was, pretty much in line with expected. I mean, does the churn tend to have a sort of timing impact as well? Does it tend to you lose more customers in the first half, given that's probably when they're thinking about coming up for renewals, I guess, in the second half of the year, if they've signed typically in the second half of the year?
I don't have specific data on when we've seen churn over the course of the year, but I will say that we've been pleased by the response of our customers to our outreach in this time. As you know, Limeade has software that helps people reach hard-to-reach remote workforces and communicate important things to those people, especially around topics like stress management, emotional health, financial health, physical health, and other topics. So we have been absolutely playing offense with our customers and making sure that they're aware of all of the tools and resources we have to support them, and happy to reaffirm our guidance on on our overall metrics for the year, of which churn is a part.
Okay. And just on the cash flow timing, it's helpful you've called out that sort of third-party component in that, the cash flow impact. Just general timing of cash flow, are we expecting the March quarter to be typically a good quarter, given there'll probably be end of year, end of calendar and financial year billing in December, and therefore cash flows coming in that March quarter? So should we expect, as we move forward and you obviously release more quarterlies, that the March is a particularly good quarter for cash flows?
Yeah, I think that's a very fair assessment. We tend to have higher cash flows, positive cash flows in Q1, as we did last year as well, and that has a lot to do with just the seasonality of customer payments. We had several customer payments where they paid us in advance, so that's a good analysis.
Yeah, okay. And you did also call out that some areas are a little bit behind, spending R&D and G&A. Are they areas that you think have any a revenue impact and your ability to catch up in this sort of time? Is that something that you think you will catch up, or do you a bit more prudent given the sort of uncertainties out there that those areas may stay a little bit below budget?
I would just say first of all, we have a great and supportive board. We are meeting with a much greater level of frequency with our board to make sure that we are constantly informing them of where we stand, and that we feel like we have our hands on the rudder of the ship and are dialing back expenses in some areas out of caution, and also out of a commitment to hit the numbers we put forth for not just revenue but also for net income before tax this year.
Okay. And the last question for me, it's obviously some time ago that the business was running in a small form, and obviously as a private business during the global financial crisis. Maybe anything you can share with us about how sort of customers reacted during that time, what you learned from them that may be applicable now, and how it's helping you sort of run the business in when a time that people might be concentrating on budgets a bit more than they have in the past?
Yeah, I would say we grew. Thank you for a long memory. We did grow through the financial crisis in 2008, 9, and 10. Broadly defined, I think some lessons we take from that time is that it becomes a little harder to predict growth and also to predict where growth will come from. I think we have the EU, the US, we have our direct channels, our partner channels, we have our different solutions, and I think it might make it a little more challenging to predict where that growth will come from. That said, I think we have a very agile and nimble company, and we'll stay very close to the game of demand, and we will keep very close tabs on not just how demand is later in the sales cycle, but all of the upstream indicators of where demand is coming from and perhaps where it's slowed down or on pause. I think many companies aren't actually lower or higher demand necessarily right now. Their demand is on pause as we work through the next, let's say, months and weeks. And so we're just taking, I think, what I would call a cautious approach and a very studious approach to the demand of the market. Another takeaway from that time that I personally take is that when everyone else is retrenching, it's often a good time to think about playing a little more offense, I guess would be a metaphor I would use, or looking for opportunities in this. And I see many long-term opportunities for both organic and inorganic growth in this crisis. I think the HR technology and maybe well-being technology spaces have been extremely heavily invested in by venture capitalists, and many of those companies might not establish enough size and scale to get exit velocity and maybe to get out as a public company. That might present inorganic growth opportunities. I also believe just the very nature of our product with helping large companies communicate important lessons of well-being, connection, bidirectional pulse feedback, inclusion of remote workforces. This is what Limeade does. So I would say that does present new opportunities that might be different than the ones we might have had in our pipeline a year ago in a more booming economy. But thanks, Kim, for all your questions. Okay. If you have any more, happy to answer them.
I'm all good. Thank you.
The next question comes from Brendan Kelly with Moelis. Please go ahead.
Hi, Henry. Thanks for the update. Firstly, for me, just in relation to the pipeline, understand some of your customers are deferring some of their decisions at the moment, but just wondering if you can give us a sense of some of the leading indicators in terms of demand and leads, which you may be able to convert later on in the year when conditions do normalise.
Yeah, so we talk about our pipeline internally as having a marketing pipeline and a sales pipeline. Marketing pipeline would be leads where we have organizations, we would call them data qualified leads or marketing qualified leads, where they're interested, they're attending webinars, they're downloading our white papers, they're taking phone calls and having demo meetings, but maybe they're not fully clear on the budget that they have the authority to use, and then the specific timing of when they'll purchase. So once they have budget, authority, need, and timing, they move into our sales pipeline. I think the sales pipeline is where we're seeing the most caution right now, where people are saying, I'm not sure, I have the budget, I'm not sure if the budget I have I can spend right now given everything else that's going on. And many companies are, laying off parts of their workforce, and it's just bad optics to purchase anything, even if that thing is focused on the core well-being and communications and engagement of the workforce. So I think the sales pipeline, there's a little more pausing. I would say the top of the funnel marketing pipeline indicators that we're seeing, without getting into details, are still very strong. We have very high levels of webinar attendees. We actually did more webinars in the month of March and April than we've ever done in any time period before. And there are a lot of, I would say we've shifted our focus away from some of the later stage funnel dynamics towards more of what I would call a care approach. Let's get people in and share all the science and resources we have to help them through this time of crisis. And think about more of a service mentality than a traditional, business pipeline management mentality. And I think that fits very well with our cultural ethos as well, and has been embraced by our workforce. And we feel like the top of the funnel is
sure. Understood. And then just in relation to that churn, just if you could just give us a little bit more granularity just in terms of how the relative performance of churn has been by indirect versus direct channels.
I think it's honestly there's not a lot to share. I'm not sure we're getting that level of detail at this point anyway. But I would say generally we are of two minds. The first mind is very pleased with our levels of churn so far this year. Anything can happen in a global downturn, and we've been very pleased with that. And then the word of caution on the other side of that is it's still early, and we don't know where this crisis will lead. Will it be multi-waved in the U.S. or in the EU, our core markets? There a lot of cards have yet to be played in this game. So we're being, I would call it frugal and disciplined to wait and see how this plays out. And I would just say we're doubling down on the attention we give to our customers. We always have as our number one value to delight our customers, but I think we're giving, we're reallocating as many resources as we can to make sure we're providing them with timely updates, innovations, and service.
Sure. Thanks for that, Henry.
Yeah, thanks, Brendan.
Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. We will now pause momentarily to allow questioners to enter the queue. Your next question comes from Marco Carreri from Perennial Value. Please go ahead.
Hello. Sorry, I was on mute. Henry, just a quick question on the third-party sales. I saw they were down in Q1. Could you just talk to that a bit more?
Yeah, I believe are you talking about over the prior corresponding period in 2019?
That's correct.
Yeah, give me 1 sec. Hold on.
All right.
Yeah, that mainly can be explained by a timing difference on things like gift cards, rewards, biometric screenings, and other third-party services that we often deliver in conjunction with the Limeade platform.
Right.
So that would explain the year-over-year change.
Okay, so there's no decrease it's just a timing thing. There's no underlying decrease in usage of those third-party services within the platform.
That's correct. Either a decrease or just a timing difference.
Right. Okay. Sorry.
It is possible, Marco. Thanks for the question. We are working with our partner ecosystem to, in some cases, offer additional services, just like we have offered to the market. We have some of our partners who have come to us and said, hey, for a certain amount of time, we would like you to offer this service for free to your customers, and that can be viewed as a very positive customer retention and value delivery service. But some of our partners are in the business of doing more physically present activities. For example, a flu vaccination or a biometric screening event where we're doing blood draws and identifying health risks that way. So we're working with some of our partners like Quest and Aduro who do these biometric screenings to offer alternatives to our customers. I don't have anything to report on whether demand for that has changed radically, but we do expect it to change, just given the fact that social distancing is creating kind of a different experience. In most cases, those services are deliverable in a approximately similar form through mail-in test kits. And so we've offered to our customers some alternatives there and can also do some rescheduling of those towards the end of the year. So in any case, those have not affected our reaffirmation of our guidance for revenue or profitability.
Okay, great. Thanks for that clarification.
There are no further questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Thank you, operator. I just wish to thank everyone for joining the call today and for your questions. Insightful as always. We look forward to updating the market throughout 2020 on progress towards our stated objectives. Thank you. Be well, stay safe, and goodbye from Limeade. Cheers.